All right, we are live, folks, with another wealth webinar weekend. It's not a weekend, though. It's a weekday, wealth webinar weekday. We got a Wednesday episode that is going to knock your socks off. I prepared a bunch of stuff this morning, and I know Steven's got a bunch of stuff. He's on fire. A lot of changes, a lot of new things coming, some good, some bad. It's going to be a new country, I think, and I think a lot of us really need to understand that this is definitely the time where I hope to God every single person out there takes control of their life and can take control of their money, because that's where it's going to start. And taking control of your life starts with making decisions. A little over a year ago, I made a decision that I was going to do a webinar every single week, the same day, the same time, in the same place, right here, 1 o'clock. And I'm stuck by that decision, and I haven't stopped. First couple wealth webinar series, we had one person, 0 people, but you know what? I showed up to the game, folks. That's the name of the game. And now, every single time we do this with no marketing dollars, completely organic, we basically get 100 people. And it's funny, I remember when we started getting 20 and 30 people, I'm like, oh, we're getting there. This is awesome. And then now we're at 100, and we're going to be at 1,000 at the end of the year. That's interesting. Well, we might be. And actually, I'm not even going to say we might be. We are going to be. We're going to be, because a lot of people realize they need to take control of the things that they can take control of. And that's what we're here for. We're here to teach you how to walk the money dog right there, how to take control of your money, but you need to make your choice. And I was on an Instagram message this morning. Somebody, and I get a lot of nice messages on Instagram. I seriously think I like Instagram better than I like Facebook. And I got this great message from this guy. I don't know who he is. He said, I saw one of your podcasts. I really love what you're doing. I've been diving into it, watching lots of videos. And he just keeps going on and on about this. And then I said, well, hey, if you want our help, I'd be happy to, put together some plan designs and talk to you about your needs. And he sends me a message. It kind of threw me. He was like, my good friend is a financial advisor, and he's completely against IBC. And I'm thinking, we've been having this conversation about the infinite banking concept and how much he loves it. And then he says his financial advisor is completely against it. So I sent him a message back. I said, okay, best of luck to you. I said, I was an advisor. I totally understand. He wasn't taught this. He doesn't understand this. And I said, but the last time I checked, no one cares more about your money than you do. So why would you listen to what your financial advisor is saying? Because he cares about how much money he's going to make. And I said, take that for what it's worth. He might be your friend, but you care more about your money and your financial future than he ever will. And he sent back a great message. He said, I'm with you. And he says, he's been my financial guy and my friend for a long time, but I really don't feel, he said, I don't feel the love. And he said, I might fire him. Well, the interesting thing there is, in this conversation, is you got somebody that's doing their own research. This guy, he's seeking out the knowledge. He's seeking out the truth, and he's finding it. And as he's finding it, he's going to the people that he trusts, that have control of his money, and saying, hey, I found this great thing, this infinite banking concept. This is what it does. And before anything else, and I'm going to make an assumption, his advisor says, oh, that's terrible. That sucks. Buy term, invest the difference. And he's like, yeah, but that's not what I'm seeing. So Tim is at a crossroads in his life right here. Okay. He's standing at the corner, and he can go many different ways. He could decide to keep seeking the truth. He can just conform and just say, you know what? Yeah, you're right, Mr. Advisor. You're my friend. I trust you. Keep control of my money and tell me what to do. Or he can basically kind of go and, carve his own path and decide what he wants, how he wants to do it. And he could fire the advisor. So he's at a crossroads. And I got to ask everybody on here, how many times in your life have you been at that crossroad where someone in your life that you trust, someone that you love, tells you you shouldn't do something you've been researching, something you've been chasing, a dream you have, and then somebody tells you, oh, that's silly, that's stupid. Why would you do that? We've all been there, haven't we? Because I've been there. Steven, you ever been there?
Oh yeah, many times.
I've been there. My mom's my unconditional one, but my mom's been that person that said, when is enough enough? When are you just going to be content? When are you going to do this? She just doesn't understand. And she wasn't standing in my way, but she's questioning where I'm going and why I'm working so hard. My father, in early years of my life, when I was chasing the dream of being a pro snowboarder and having my shop, said, that's a stupid idea. Almost in those exact words, come work at the factory. I'll get you an interview and, you can work 30 years and get this lovely pension from GM. That didn't work so well for him. But, we've all had those people. And a lot of times those people are the people that are closest to us. And that's what makes it so hard. How do you tell your father, your mother, your loved ones, okay, your closest friends, that they need to back off and let you chase your dream and stop trying to live your life for you and tell you how to live your life? It's a difficult thing, folks, but we all are there. We all have been there, and we all will be there again in our lives. And we need to make the decisions that are best for our financial futures, for our lives, not for somebody else's. And unfortunately, when we make that decision, somebody's going to be hurt. Somebody's going to be upset with you. And that's just life. There's a lot of upset people right now, and that is just life. We then have to decide, are we going to sit there and sulk and be upset and, dwell on it and just play into it and conform? Or are we actually going to create the life we want? Today, Stephen and I are here to help you create the life you want by teaching you some simple things on how to do that. And what I'm going to do, and Stephen, I know you got some stuff, is I'm going to teach you what I learned. I'm going to teach you how banks operate. Okay. I'm going to teach you why banks, you can love them or hate them, but why they make so much money. And I'm going to teach you then this thing called fractional reserve banking, because I know many of you will never read the book, The Creature from Jekyll Island. And many of you will never read books on economics because it is a dry and boring thing, but I have. And I'm going to teach you what I know in a very simple way about what fractional reserve banking is. And then I'm going to show you one very simple thing that you all will learn a lot more about at the 3-day event, which we're going to talk about in just a moment. And I'm going to show you how you can change all that, how you can change the entire dynamic, just like I did, just like thousands of other people have. You can change your entire financial future by changing one thing, by adding one step. So with that being said, Stephen, what I'd like to do real quick is I'd like to open up today's wealth webinar series with a video. So let me share my screen real quick, and I'm going to get it right this time, Stephen.
See ya.
There we go. Can you see the black screen?
We're in.
Learn the secret to how a 200-year-old method has been used by the world's wealthiest people to grow, generate, and control their wealth. We invite you to a 3-day virtual event with the top minds of the financial world live on January 22nd and 24th. Meet Jack Bosch. He's an experienced entrepreneur, real estate investor, a respected industry leader, speaker, educator, husband, and father. Jack is the co-creator of the Land Profit Generator Method, the leading land flipping business incubator in the world. Jack and his wife, Michelle, are undisputed authorities in the land investing space, helping land investors scale with their unparalleled Land Profit Generator Method. Stephen Naugle left his career as a personal financial advisor to pursue his dream of being an entrepreneur and real estate investor. 14 years later, he has never looked back. Stephen has spoken on hundreds of stages across the entire United States and worked with thousands of students over that time. As a full-time luxury real estate agent in South Florida, along with managing a real estate investment business, Stephen lives and breathes in real estate. Meet Chris Naugle, full-time real estate investor, coach, mentor, sales professional, and entrepreneur. He specializes in wholesaling real estate to real estate investors and mobile home parks. Chris also coaches everyday individuals to help them get started in real estate and get a wholesaling business off the ground quickly, and show them how to take their business to the next level. Chris Naugle also manages a portfolio of $22.5 million in real estate. Meet Bo Winder, an executive and senior funding advisor with Seed Capital. For the past decade, Bo has traveled the country helping thousands of entrepreneurs and investors start new businesses, buy franchises, fund real estate deals, and obtain the smartest resources of business capital. During this time, he has consulted with over 15,000 investors and entrepreneurs who have received over $1 billion in funding. Meet Eric Winkler, who's always had a zest for building businesses and partnerships with entrepreneurs. With over 16 years of experience providing business owners knowledge and confidence regarding entity selection, asset protection, and business funding, Eric's extensive partnerships with each business owner bring great success. Successes like Rockstar Energy Drink, a company Eric aided in business formation, who in 2015 boasted $820 million in worldwide annual sales. Meet Brent Kessler, whose main goal is to simply help more people understand how to manage and grow grow their wealth. For the last 8+ years, he has been lecturing to thousands of people around the country on the dynamics of the money multiplier method and helping individuals to break the bonds of financial slavery, showing them how to take control of their own financial life. Brent has had a passionate belief that whether you make $10 an hour or $10,000 an hour, you should know and have this powerful information to keep control of your own money. Take advantage of the offer to sign up for the 3-day virtual event to learn from real estate experts and financial experts from around the country to take back control of your money.
So there it is, folks. The newest video we just did. It is one that should get you guys all jazzed up. There's a lot of flashing lights and moving things in that video, but you know what? That's the point. It keeps your attention. And for any of you that stick with us to the very end, I got another special video that I'm going to be playing to only the ones that make it to the end. And it is one designed to make you laugh your butt off. So we'll get to that one after. Stephen, real quick, before we start diving into this, because I got a lot of stuff I want to cover, and I know you do too, and we've got a very short period of time with everybody here. But can you just tell everybody a little bit about what we've created above and beyond what they just saw and what we're going to be doing this weekend? Because I think it's going to literally be one of the most timely, important 3-day events that we've ever done. And I'm literally sweating and not even sleeping well at night, worrying about how am I going to change people's lives.
Absolutely. You know, it's, what can I say about this 3-day training? You know, we've fine-tuned it this last year. We've, improved different areas. We've brought in new speakers and experts, and so super excited for it. But for those of you that are new to this and maybe you haven't seen our previous 3 previews, this is a lead-in to our 3-day Essentials Money School workshop that starts Friday morning, this Friday, January 22nd at 10 a.m. Eastern time. It's 10 a.m. to 2 p.m. Friday, Saturday, and Sunday. But I will say set aside time beyond 2 p.m. because we do end up staying longer. We go into some question and answer, and we spend some extra time with you. So prepare for that. We'll put the link up right now. It's $197 for all 3 days. You get the Money School File Vault, which are all the tools, different calculators required for evaluating real estate investments and different private lending investments, things like that. You get access to that. You get 30 days of Money School TV, which is our on-demand investment community, I guess, so to say. You get access to our private Facebook page. You get a free self-directed IRA. That's $350 they usually charge. We get that waived because of our relationship, again, with Horizon Trust Company. So you get a whole bunch of extra bonuses along with this. But these 3 days are very important. Now, those of you that are with us here right now, what you're going to learn today is not taught at that 3-day or, during our 3 days that we're spending with you. So this is all new information. And then we're going to kick off Friday morning with stuff you haven't heard yet over the last 3 previews or today. So if you have to hop off early, make sure you register for it. And then when the replay with this comes out for right now, watch it before Friday, because this is today. This is going to open up your mind, and it's going to get your mindset right for what we're going to teach you on Friday. Because like Chris said earlier, the world's changing quickly, very, very quickly. The United States is changing today. We have a whole new administration, a whole new line of thinking. There's all kinds of executive orders coming out that are changing the way we do business with other countries, with different rules, regulations, and all the stuff that goes into global economics. All that's changing as of today. So you need to be prepared. You need to understand what's coming up. If you're a younger person and you're just trying to set yourself up, maybe you have dreams of becoming a millionaire, now's the time to do it. Anytime that there's volatility in markets, anytime there's blood on the streets, which is this house of cards, these bubbles we're in right now, eventually they're going to pop, whether it's this year, whether it's next year, whether it's 3 years, they're going to pop. Be ready for it, right? If you're at the point of, you've already made millions of dollars and you have the retirement money and you're scared of losing that coming down, along with the market and stuff learn how to hedge, learn how to protect yourself, learn some alternative investments, alternative places you can put your money. And that's what we're going to teach you over these 3 days. All right. So, if we have time, I'll get into a little more, why Money School is developed, what the 3 pillars of education are when it comes to Money School, but basically real estate, money, and legacy. And that's what everything we build on is based around. And don't get me wrong, I'm not going to teach you got to go out there and flip houses. You got to go out there and open a wholesale business or buy real estate. No, I'm not saying that, but you need to understand real estate because it'll be part of your investment strategy, whether it's on the active side, whether it's on the passive side, or whether it's through like private lending. So taking control of your money starts with that. And then we can build from there into other alternative assets that we'll get into. But those are the 3 pillars of education and everything we're going to teach you. So how do you get that money? What do you do with your money? How do you protect that money through creating a legacy? And how do you plan on creating something for your family to leave assets and income down the road instead of debts and liabilities to your kids, your grandkids, and future generations? So that's what Money School is all about. moneyschooltraining.com/registration. I will be there all 3 days with you. My email, snaggy, chrisnaugle.com. If you want to talk before the training, let's chat for a couple minutes tomorrow, later today or tomorrow before Friday morning. And then after the 3 days, I want to speak to every one of you that's on, because I want you to not only absorb everything that we're teaching you over the 3 days, answer any last questions that you have coming out of it, but also make sure you're implementing and taking action on everything that you learn. And we want you to do that right away when it's hot in your mind, starting Monday morning. So my calendar is pretty blocked off next week for just this group that's joining us for this 3 days. So looking forward to it. Chris, I'll let you take it from there, but I can't stress enough that what Chris is teaching you right now is one of the most important parts you'll learn, even when it comes to this entire 3 days, because mindset is everything, especially in the world we live in, where it's constantly negative news out there. It's constantly, all these distractions, all these other things that are happening. You need to stay focused on you, your money, your family, and your goals. And that's what this is going to do for you. So I'm super excited for it.
The biggest thing too, and I'll just kind of echo off of that, is I can teach you a lot about money, about getting control of your money. My whole team is here to do that. But the one thing that goes well above what I can teach you is something that we all probably, and I want you guys to comment on this. If you remember this book when you were a kid, if your parents read you the book called The Giving Tree, if any of you remember that book, give me a yes, or say I read that or I remember that. It's called The Giving Tree. And that book, when I heard it as a kid, you remember your parents. My mom read that book to me a lot. And then as you get older and you read that book again, if it doesn't bring tears to your eyes, there's probably something wrong with you. And I don't mean to say that in a negative way, but like that book, when I read it, brought tears to my eyes, because it really makes you see what one of the most important things in life is. And it's not money. It's not things. It's not this stupid election or inauguration. It's giving. And the other day, somebody posted on one of the Facebook groups I'm in a picture. And the picture was a picture of a father with a little boy on his back planting a seed. And if I asked you all, when is the best time to plant a seed? What would you guys tell me? Most of you would say 20 years ago. And I would agree. The best time to plant a tree was 20 years ago. But when the second best time to plant a tree is? Right now. Right now is the best time to plant a tree. And then that photo that was posted, all it was is this father with his son on his back, kind of like choking him. And you can see he just planted a tree and it's got like a little sprout and he's watering it. And then the next slide right underneath that shows that father, which you think it's the same father, but it's not. He looks different. It's another father with another kid, but it's a little girl on his back. And then he's got another kid on the swing and he's pushing the other kid on the swing, and the swing is a tree swing. And then you see the father, like a little thing above him, he's saying, "Thank you, Dad." Trying to not kind of lose it, but like, think about that. His father planted a seed when he was a kid. His father passed away, and now the kid is enjoying that tree. We need to sometimes get out of our own heads and think that it's all about us and realize it's not. It's about something a lot bigger. It's about what you can do on the time, in the time you have on this earth, to basically give and to create a legacy. So although I can teach you how to get control of your money, I can't teach you how to be a good person. I can't teach you how to give. I can tell you that, you should give and you need to give, and you need to give your best stuff away for free. And that's really all that matters. But read that Giving Tree book, and you can see I kind of got a little emotional there, but like, it's really important that you understand that, especially right now, because we can't control a lot of the things that are about to happen. We can't control that our taxes are going to go up. We can't control any of the political policies. We can't control China. We can't control anything that's going to happen, but you can control the mark you leave in this world. And although, that mark might be small, it might be big. Your mark, whether it's big or small, might be the biggest mark for one person. Who is that one person? Well, that's for you guys to decide. So let's get into this. So take control of your money. You got to make that choice. You got to make it now. So here we go. I learn a lot from banks. And the reason I learn a lot from banks is because if you think about it, our whole lives we've been taught to give up control to the banks. Every time we get a paycheck, we put the money in the bank. I mean, still today, I do this, right? We get a check. I just did it today, and you deposit the check in a bank. And what the bank does with that money is the bank moves that money. But what you did with your money is you actually just parked your money and you left it sit there. It's like putting your money in a stagnant pond and expecting something to grow. Nothing grows in a stagnant pond. You've all walked through the woods and stumbled upon like that nasty smelling black water, just awful looking stagnant pond. We've all seen them. And some of you like me, when I was a kid, I didn't know the difference. I would cast a pole in there and I would think I'd catch a fish, but even if I caught a fish out of that stagnant pond, I would never eat it. Just wouldn't eat it. But if I went to a raging river, if I went down to Niagara River here, in this area, and I caught a fish out of there, that fish is alive. It's moving. It's a big, moving body of water. Well, money's no different, folks. If you park your money somewhere and you just let it sit, your money's going to die. They just printed several $1 trillion and they're going to print a hell of a lot more. And I don't mean to say it like that, but shit, man, they're going to print so much freaking money that this country will never make it through that because they're going to intentionally kill the dollar. It's going to happen. It's already happening. Like back in 2008, they printed, I think it was $700 billion. And I remember it like it was yesterday. I was an advisor struggling to make it through that time. Gave all my clients the wrong advice because that's what I was taught to do, is to give them the advice I was given as an advisor by my consultants, and it was wrong. And my clients lost 20, 30, 40, 50%. And so did I. And it was because we all did the same thing everybody else did. We conformed, we just did it. Now, $700 billion back then was a record. It's the most money that ever was done in a stimulus bailout. And I remember back then hearing, the experts saying our kids, grandkids, all of them, generation after generation are going to be paying for that debt. Folks, that was $700 billion freaking dollars. And it was 2008. It's 12 years past. So 700 billion adjusted for inflation is a lot more. Maybe it's $1 trillion. I don't think quite that much, but let's say it's $1 trillion. Okay. They just printed $3+ trillion and they're going to print more. Who's going to pay for all this? It's not going to be your kids, folks. It's not going to be their kids. It's not going to be their kids or their kids. It's going to be all of them. It's going to be all of them. So if you park your money somewhere, that money will evaporate to a thing called the hidden tax of inflation. And the second hard thing that we have to realize is the second eroder of your wealth is going to be taxes. It always has been, but it's going to get worse now. So if those are the two big things we're doing, well, let's understand why a bank doesn't really have to worry as much about the inflation because they understand how to move money. So you've probably seen this, but we're going to do it again. Let's say this is your money right here, okay? This is your money. You got 100 grand and you deposit that 100 grand into the bank. Not your bank. This is someone else's bank. Let's just call this Bank of America, okay? You deposit your money in Bank of America and Bank of America agrees to pay you 4%. 4% on your money. Not bad, okay? This deposit to you is an asset. This deposit to the bank is a liability. So how many of you want assets or how many of you want liabilities? You all want assets, right? You don't want liabilities. So if you want liabilities, well, or if you want assets, well, so does the bank. So in order for the bank to take your asset, your deposit, make it another asset, they have to move that money. So they lend that money out on somebody's mortgage. So this is the house somebody's going to buy. They apply for a mortgage to Bank of America. Bank of America approves them, charges them 7%. I know exactly what you're thinking. You're thinking, Chris, mortgages aren't 7%. I know they're not. And you're not getting 4% either. Don't get hung up in the numbers. I assure you, mortgage rates will be 7% soon. Again, you can't forget They just printed 3 trillion or 4 trillion. I don't even know where we're at anymore. I really don't. They printed a lot of money. And with printing money, eventually you have inflation, and you're going to have hyperinflation like you've never seen. And they're going to have to cap that inflation somewhere, because they can't have inflation run away like it did in the 80s. They'll probably cap it at 5%. But 7% seems like a lot on a mortgage today, but someday it won't be. That'll be cheap someday. So somebody gets a 7% mortgage, they exchange the dollars from that mortgage to the seller puts the money back in, creating another liability. The bank then moves that liability out in a loan and loans Stephen Nagy the money to buy his new BMW M4. He rewards himself because he says, screw it, new year, everything's changing, I'm going to get myself a new car. So he buys an M4. The bank charges him 8% on that money. He then takes the money the bank gave him, gives it to the dealership. Dealership puts the money back in, creating another liability. You guys get a good idea. The bank loans the money back out to one of you for doing a house remodel. You want a new kitchen, you want a new bathroom. So you do that, you pay 9%. You pay the contractor puts the money back in, liability. Then you take a trip to Las Vegas, you put it all on black, it hits red, you rack the credit card up. You need a debt consolidation loan because you can't let your wife know or husband know. So you get that debt consolidation loan, you pay the credit cards, you deposit the money. Who is in control of every single one of these transactions? Is it you? The person who made the deposit? Were you in control of all these? No. Who was in control? The bank. The bank was in control of issuing that mortgage. The bank was in control of issuing Stephen's car loan. The bank was in control of your home equity line of credit for that house remodel. And the bank was in control of that debt consolidation loan. They controlled 100% of every one of these transactions. You know what else they did? They not only controlled it, but how much risk did they actually take? It's not their money, it's your money. You gave them that because you wanted an asset. You deposited your money in the stagnant pond because you wanted an asset. But before that, your reward was they gave you 4%. Okay? So they didn't take much risk at all. The only risk they took is that this person doesn't pay their mortgage. No big deal. They got an asset. Okay? This is why one of the biggest important things you can ever learn from anything we teach is how to be the bank. It's the ultimate. But if you're going to be the bank like a bank is a bank. I don't know if I said that right, but when a bank lends money, almost all the time they lend money, they're collateralized. So if you don't pay for that house, the bank takes the house in a foreclosure. They already did their due diligence. They saw that they want to take that house. 2008 was an exception. It was crazy times, but get it? The car. If Stephen doesn't pay his car payment, they just take the car back. They send a guy with a flatbed or a tow truck and they go grab that car. Okay? Down here, if you don't pay this home equity line, they just take your house. They put a lien on your house. So someday later, when you sell your house, you have to pay them. They are first in line or sometimes second. They're collateralized. They didn't take much risk here. But if we really looked at this and we did the difference here and we did all the math, we did 4, what they're paying you, minus 7, 4 minus 8, 4 minus 9, 4 minus 12, and you added it all up, the bank made 20%. That's how much money the bank made in moving your money and my money and Stephen's money and everybody else's money. Colleen's money was being moved by the bank too. All of our money's in motion, but it's not in motion by us. It's in motion by this bank. And this bank is making 20% on our money. But is the bank really making 20%? Because there's a mathematical error in this. The bank isn't making 20%. The bank's making 5 times more. What is 5 times 4? Can anyone tell me? 5 times 4 is 20. Which doesn't that mean that it's 5 times more money than what you make, or 500%? So if I were to write this really big, the bank just made 500% more money than you did. Okay? Why was it that you didn't make 500% more than the bank? It was your money. It was your money to start with, but the bank made 500% more money than you did? That seems backwards. If it's your money the bank's using, why is the bank making 5 times more than we are? And the answer comes down to one thing and one thing only. They are in control because you gave them control. That's all you did. You gave them control. So now let's go to the next thing. I drew this whole thing. I saw like a thing, and I was always trying to find a way to explain fractional reserve banking. It's not an easy thing to explain. People don't always understand it. So I came up with this, and this probably does a really good job of explaining the real story behind fractional reserve lending. And here's what it is. So this is you. You got $100. You go into your bank and you give them $100. You literally walk into your bank and take $100 and you hand it to the teller. Now, when you give it to the teller, do you tell the teller, hey, take my $100 and put it in my little box in the back with my name on it? No, you just give it to them. You don't care what they do with it. You just give it to them. And that feels good. Like you're like, yes, I got $100 more in the bank. Okay, so that's your asset. And you're going to make less than 1 or 2% on that money. Okay, so what the bank then does is the bank holds $10. So the bank takes your 100 and they take, if I got a 10 in here, which I don't, they take $10 of that 100 and they put it in reserves. And we're going to talk about where those reserves go. It's called tier 1 capital. I just want to remember that, tier 1. Okay, they take that $10 and they hold it in reserves. Then what they do is they take and they create $90 out of thin air. They literally just, they can do this. This is what banks do. They literally use your $100 deposit, take $10, hold it, and take the other $90 and create that money out of thin air. This is your money there, right? They should just be holding your money for you, but they don't. They create $90. Okay, then what happens? Jill goes out and she needs a loan. So Jill goes to the bank and borrows $90 as a loan. The bank charges her 5%. Jill then goes to John, and John is selling a pair of these super in-demand Nike SB limited edition sneakers, which are the hot craze now. She got them for $90, but just, they're a lot more than that. And she uses that $90 loan, gives it to John, and John mails her those shoes. She's psyched. She now exchanged money that was created out of thin air to John so that John could basically sell her those shoes. And she's willing to pay 5% on that loan to the bank, 5% to the bank. And remember, the bank, that money didn't even exist before you deposited it there. Okay, so we got that. So now John takes his $90 that you just gave him, which was the loan that you just got from the bank, or Jill just got from the bank, and John deposits it in the bank. The bank holds $9 of that money in reserves and then creates $81 out of thin air. Billy comes into the bank and borrows $81 as a loan. He takes out a line of credit for $81, okay? And the bank's gonna charge him 10% because it's a higher risk loan. Billy then uses that $81 loan from one bank to pay on his Visa because he's in hard times. COVID hit him hard. And he takes that loan from his line of credit and he pays Visa with it. Gives it to $81 to Visa so that, Visa has their monthly payment. Visa, on the other hand, is charging him 20% interest on that money. So he's already paying 10% on this loan, and now Visa is charging him 20, but he had to make that payment, and the only place he could get it was from his line of credit. I know this seems fictitious, but you know what? I've done this. I've been in hard times where I've literally taken money from a line of credit to make another loan payment. I've done it, and it didn't feel good, but you know what? It's all I could do because I didn't want my credit to get hit. I had the money available in a line of credit. I just used that to pay my credit card. Same thing. Visa, which is a bank, takes the $81 and deposits it with a different bank. This bank holds $8, what's actually $8.10, but $8 in reserves, and they create $43 or $73 out of thin air. And this thing goes on and on and on. You get boring. You're getting the drift, right? It just gets rinsed and repeats. And the bank keeps all the records of these loans, and they keep the records of all the deposits. That's it. It's just numbers on a computer screen. They just keep records. Your $100 became $1,000 to the bank in that example. It did. And the FDIC, which is some fake thing, it's not fake, but they don't have the money to back your money at the bank. The FDIC says that for the first $250,000, if I'm not mistaken, I think it's still that, they will guarantee your deposits. And as long as there's not a mass run on the banks, and if you read The Creature from Jekyll Island, they even explain what would happen if there was, they'll give you $250. And I'm not saying that like you should be worried about your money at the bank and losing the money at the bank. That's the last thing I'm really worried about for you guys. If you've got money in banks above and beyond $250,000, well, that's just foolish. Shuffle that money around, move it into different banks. Go open a bank account at the community bank, open one at the credit union, spread it out. I would say don't keep more than $100,000 in any one bank. That's just me saying that. I know that they guarantee up to $250, but Just be safe, spread it around. Diversify your money by diversifying your banks. Because if there's ever a run on the banks, like there was in March when COVID happened, you go into your bank needing your money. You're like, hey, I want to get that money that I just deposited in the bank. I need to take it all out. The bank, during a time like that, will say, well, we can't give it all to you. We can only give a max of $3,000 today. And then you got to go back, the next day and take out more. And when you hit a certain limit, they make you fill all sorts of government forms out. Like, why are you taking your money out of the bank? Well, duh, because it's my money and I need it. We're in kind of hard times. I need my money. Okay, well, we can only give you $3,000. If that's how banks work, and that is indeed how banks work, why do people think they're actually in control of their money at the bank? Like, because it just baffles me. If you were in control of that money, you'd be the one making 500%. If you were in control of that money, you'd be able to take that money any time you want. Not when the bank says you can take the money. Not when it's convenient for the bank. Not at the denominations the bank tells you can take it out. If you were in control, you could take it out anytime. If you owned the bank, you could walk into your bank and you take your money out anytime you want. But that's not the way it works. Not the way it works at all. So let me do a recap. You started with $100. Jill then had $90. Billy had 81, then 73. That's $271. Fractional reserve banking took your $100 and made it 271 plus, plus, plus. It's fiat money. But the thing you might miss there, that seems pretty cool if you could do that with your money. But you got to remember, the bank made interest the whole time. The whole time that happened, the bank made interest on your money. And I know some of you are watching this thinking, oh, well, yeah, but that's just the way it is, Chris. You said it earlier. It just is what it is. You got to deal with it. Wrong. Absolutely wrong. I used to believe that was the truth. I used to believe that I wasn't in control. There was nothing I could do. I just got to conform and follow the herd and just do what everybody says. And my grandma said I should just deposit money in banks. And everybody says when I have money, I deposit it in the bank. And we do, but you are in control of how much you want to actually leave at the bank. It's always going to start there. I want to be clear because I haven't figured out where there's a better starting place than a bank. We have to have a bank account. Okay. But once it gets there, it's your decision on how much you want to leave there. It's your decision on where the money goes after there. And what I'd suggest, like this says, is let's start by just changing one thing. And let's start with changing who controls your money and where that money goes first. And if we were to do this, and you're going to learn all about this in the 3-day training. It's single-handedly, Brent's going to be doing a presentation on Saturday morning, teaching you about this. I'm going to do an advanced presentation, I believe on Saturday night or maybe Friday later. I'll get it in there somewhere. But when I heard this, when I saw this for the first time, I certainly didn't believe it. I was an advisor and I thought there's no way it works this way. I was never taught this. Just like that guy on Instagram's financial advisor. No way this works. That infinite banking thing, that's a scam. There's no way. It's too good to be true. Can't work that way. I know I'm an advisor. Okay. That's what I thought. Why? Because I was an advisor. But now how I think about it is now I understand that I'm in control and I can be by changing one thing. And all I do is I change the name on the bank. Okay. If I don't want to deposit my money at Bank of America, I want to deposit the money at the Bank of Naugle. Sounds way better too, right? The Bank of Naugle. TBN Bank. I love it. And if I do that, if I make my own bank, I can't create a regular bank because, I'm not going to play into that. So to create my bank, I have to do what the Rockefellers and the Rothschilds and Walt Disney and Ray Kroc did. I got to go somewhere different. And that somewhere different is nothing more than a giant mutually owned insurance company. Why an insurance company? Well, number one, insurance companies are in the business of guaranteeing things. Secondarily, insurance companies, if you don't already know this, have all the money. You think banks have all the money? No, banks, I just showed you, they just make fake money. Insurance companies actually do have the money. Banks get their money from insurance companies. Insurance companies loan banks giant blocks of money. Insurance companies are where banks take all that tier one capital. Remember from that fractional reserve? Remember the $10, the $9, the $8 that the bank had to hold in surplus? Do you think they hold that money in surplus at another bank? No, they don't. They hold that money in surplus at giant mutually owned insurance companies the same way we are going to teach you how to do that. So the banks have been doing this for hundreds of years. And since 2008, rules changed with banks. They have to hold more money in surplus now. And where does that money go? Mutually owned insurance companies. And how do they get the money into the mutually owned insurance companies? Well, it's very simple. They get the money into the insurance companies the same way you will, through whole life insurance. But not whole life like Dave Ramsey talks about it, not whole life like you bought whole life for life insurance. They do it in a completely different way. And if you want to know what that way is, Google Bully bank-owned life insurance, and you'll see all about it. And I'm not going to get too deep into that, but this is how they do it. And these are very specially designed and engineered whole lives. And what the bank does, just so you guys understand this, because I'm really kind of trying to help you see how banks do this, is quite simply, a bank is a corporation. And an insurance company will not insure a corporation, okay? A life insurance company will not insure a corporation. It's not a real thing. It's an entity. So they need a body. They need a living, breathing soul to insure. So what does the bank do? Well, the bank goes out and promotes Jim, your neighbor, to the vice president of, I don't know, something. They got a vice president of everything at banks, if you haven't noticed. How many of you have walked into your local bank and just looked around? How many gold or black little name tags that say VP on there did you see? I bet you a couple, right? Every bank has a whole lot of vice presidents, and nobody ever asks, well, why do you need so many vice presidents? Well, the reason is very simple. You see, when the bank promotes somebody to a vice president, the bank instantly gets an insurable interest in that human being. So the bank now has an executive called a vice president that they now can insure. That's right. So now that that's an executive, they're essential for that operation of the bank. So the bank has an insurable interest in that vice president. God forbid that vice president should ever die, that bank would suffer tremendously. They'd have to find a new vice president of janitorial, and that would be hard. So when they promote this vice president, they give the vice president a small increase in salary. So they get an increase in salary, okay? They give them a fully paid death benefit, okay? And that death benefit, let's just call that $100,000. This is the bonus package that the vice president gets. Okay, they got a fully paid death benefit so that the wife or the spouse will get money should anything ever happen to that vice president. And then they get a deferred compensation. And deferred comps come in a lot of different shapes and sizes, but let me just simplify it. If that employee works for that bank for 20, maybe 25 years, when they retire, the bank will pay them that deferred compensation out in a monthly check. And then that employee can have that monthly check forever. So this is a pretty good deal for the vice president, right? Not bad, but is it a good deal for the bank? Like, did the bank really need all these vice presidents just so they could give them an increase in salary, a paid up life insurance policy, and a deferred compensation plan? No, folks. The bank did this because they needed a body to insure. And the bank went out and they said, all right, big Mr. Mutually Owned Insurance Company, we've got another vice president. Really, another one? That's your 100th this week. Yeah, I know, we're really growing right now. You know, everybody's depositing their money in the banks, and you know, people are scared. So banks have those FDIC guarantees. So we need a lot of vice presidents. Great. So what do we got? Well, Jim, our new VP, what we'd like to do is we'd like to take out a $5 million insurance policy on him. And what we're going to do is we're going to put X amount of money. We're going to put $2 million, or I don't know, let's keep this real. We're going to put $1 million a year in premiums for this employee. Great. And then the insurance company says, all right, well, Mr. Bank, who's going to be the beneficiary? Well, we're going to make Jim's wife the beneficiary for $100,000 of the $5 million. Great. Who else is going to be the beneficiary? Well, the secondary beneficiary above and beyond the $100,000 is going to be the bank. So just make the bank the beneficiary. Insurance company says, no problem. You're the owner, the payor. So you can also have the entity be the beneficiary. Perfect. Great. So they get this whole deal. So now life goes on. The insurance company deposits, and I'm just making this up, but let's just call it $1 million a year into this life insurance policy, which is nothing more. And you know, here's another thing that I want to be very clear about. And anyone that can prove me wrong on this, please do, because I want you to. I'm not just here talking. I've done my research. I've been in this business a long time. I want you to try to prove me wrong. I do. Fact check me, please. Fact check me, fact check me, fact check me. And here's what I want you to fact check me on. I want you to go and I want you to find out is there any banks buying IUL policies, index universal lives, for their BOLI? Is there any banks out there buying BOLI policies on their vice presidents and using an IUL instead of a whole life? I'd love to know that. Is there any banks going out there and using term insurance for their BOLI? Okay. Is there any insurance companies out there using ULs or VULs or any of these other fancy ones for their BOLI? Because if any of you can let me know that, I'd really appreciate it. Because I've looked, and you know what banks are buying? Not IULs. They're not buying term insurance. They're not buying VULs and ULs. They're buying the most boring, awful life insurance policy, says Dave Ramsey and Susie Orman out there in the world, called whole life insurance. So you got to really make an assumption. If the banks are so freaking smart and the banks make 500 times more money on that example I gave you than we do, and they do all these really smart things like, and our mortgages make all the money in the first 7 years, 80 to 85% of every payment you make on your mortgage payment goes to the bank in interest. They're smart. So if they're so smart, why are they buying this stupid, terrible life insurance policy called a whole life? There's only one of two answers. Number one, are they stupid? Or number two, do they know something we don't know? That's a good question. And I want you to fact check it and figure out what the answer to that question is. But this is what they're doing, folks. So then let's fast forward. Vice president hits 65, retires. Okay, he's no longer getting a salary. He's still got his life insurance. And now he starts getting, I don't know, let's call it $2,000 a month from this deferred comp. He retires at 65. Life is boring, goes fishing as much as he can, does all the things. And then, at 75, this vice president, he graduates. So he graduates. And a lot of people are sad. He left a legacy. He changed some people's lives. He graduated. He passed away. When he passes away, what happens? Well, there's a $100,000 life insurance policy his wife gets. And she's thankful that he did that. She's thankful that he put 20 years into the bank and she gets $100,000 or whatever it is that she gets in a death benefit, because that's his legacy. Who gets the rest? Where'd the other $4.9 million go? You guys heard me say that, right? The bank? Did the bank put more money than that into the policy? Yeah. Remember, they were putting $1 million a year away. So would the death benefit only be $5 million? No, it'd probably be like 20 million or more. The bank got all that death benefit paid out to them. And all they did exactly what you're doing. But where did the money come from to put into those insurance policies? Where do you think that money came from? It's called Tier 1 capital. Look it up. Tier 1 capital for a bank is your reserves. It's the money that they can't risk. It's the money that they can't put out there in the markets. It's got to be in a guaranteed place. Some of it lands in U.S. Treasuries because they're guaranteed. Some of it, and most of it, especially since 2008, goes into these specially designed and engineered whole life policies. That's what they do with it. It's your money funding those life insurance policies. So how about if your name was on the bank? What would you do? Well, first off, as of right now, and this will change, I'm sure, in 2022. Right now, though, the guarantee is 4%. Insurance company will pay you 4%. And every year, since they're mutual, they will pay you dividends on your money. That's far better than you're getting at the bank. And then if you need the money, what we're going to do is we're just going to take that money out in a loan. Because if you owned a bank and you needed money, would you just go to your bank and take a loan? Precisely. But if you take a loan from your bank, you should always pay your bank back with interest. So if we take a loan, when we do that, the money has to go from your bank, which is being held at an insurance company, into a regular bank. Okay, because you can't get a checkbook with an insurance company. It's all digital. But with your bank, you can get a checkbook. So the money goes into the segregated account. And then let's just say you got an LLC and you're going to buy a real estate deal. So let's say you took a loan for $20K out of your bank and you lent that money to your business at 6%. Let's just call this the promissory note. Okay, there's a note here and it's a promissory note. So you're going to lend that money to your business. Great. So you charge yourself 6% on the money over 1 year or whatever time frame it is. Now your business has $20,000 to go out there and buy this real estate deal. Then this real estate deal puts $1,000 a month into your entity's bank account. And out of that $1,000, 6 on 20, I don't know, what is it, $600? Whatever, I'm making numbers up. Your rental property pays your bank back $600 a month. The same amount you would have given to somebody else's bank, you just put it back into your bank. So now every single month, your bank gets $600 a month, but you're charging 6% on your money and you're making 4%. So you're making money twice. But what if you did this same exact example, but you did it with buying cars, or you did it with paying off credit cards, you did it with vacations and taxes, and I could go on for days. All I'm telling you folks, and I just wanted to give this example because I wanted to kind of help you understand, this is kind of the foundation that we build off of, because this is what we got to get first. We got to get control. Just like that first slide said, the very first thing you need to do is you need to figure out who is going to be in control of your money. What I just showed you is how you can be in control of your money. The next question is now that you're in control of your money, how do you make money on it once you do that? And that's what Money School is also going to talk to you about, all the different places to make money. Stephen, what are some other places where people can put their money that keeps them in control, that allows them to make more money on that?
Put their money, keep control, allows them to make more money.
People have money, right? I have money, and I'm trying to think, well, I don't know where to put this money. I'm scared to death of putting this money in the stock market right now because, you know, my 401ks, all these mutual funds and everything that's going on, I just don't know how much longer the stock market's going to go up. Is it going to go up, you know, till October? Is it going to go up till 2022? I mean, I just don't know, but I don't want to risk all my money. So where can I put this money?
Well, first off, if you're staying in the stock market, you know, definitely learn a little bit and educate yourself on how to hedge and how to protect against the downside and a downturn in the market, which is not hard to do. It's just learning something new and setting yourself up for it. Second, if you want to get out of the stock market, you know, look for opportunities. You know, real estate is very, very hot right now. So what kind of opportunities are there out there in real estate? Multifamily and affordable housing are huge. You know, real estate, as prices go up and up and up, people have lost their jobs. There's a bunch of foreclosures that at some point are going to hit. People are going to lose their homes. They're going to have to downsize. There's going to be a lot of opportunities for affordable housing. A lot of times that comes in the form of like multifamily apartment complexes, or, you know, smaller condos, or, you know, even mobile home
parks like Chris Ruud does. And
Chris Ruud will talk about that, you know, on the 3-day class. And, you know, it's always been a great investment, but especially with what's coming up, it's going to be even better and better. So where are those opportunities? You know, if you don't want to be on the active side, learn how to lend your money, learn how to get involved in private funds. You know, so people like Jack Petrick, people like a West Coast Income Fund, and people like, you know, different people that are in our MSTV network, you know, so, and there's a bunch out there.
Aren't private funds super risky? Aren't they really risky? I mean, everything I've always been told is like, you know, there's mutual funds and there's those private funds. Like they're so risky. Aren't they like Madoff and all those things? Like I'm going to lose all my money. Like right. What is a private fund?
Sure. So private funds, you know, there's certain things to look for in them, you know, but basically it's, you know, instead of a publicly traded company, it's just a private company. And you're basically giving your money to this private company with terms set up with a contract in place where you give them money. You know, this is what they're using it for. This is their business plan. This is what the, you know, why they need your money. And, you know, depending on what the terms are, they pay you, you know, maybe some interest on a monthly basis on that money you give them. Maybe they pay you on a quarterly basis. Maybe they pay you some of the principal back over time. Maybe all the principal comes back at the end. But that's the beautiful thing about private investments is the terms are negotiable and the terms you can come to an agreement upon, right? You know, maybe you get a percentage in that deal. So if it's a, you know, a $5 million equity you know, apartment complex, and you're, you know, investing $100,000, maybe you get a percentage of equity in that. So you're earning interest throughout while the money's being used. And at the end, when your principal's returned, you still own some equity in that deal. So once that thing sells down the road or continues to grow in value, you continue to benefit on it. So these are all things that, you know, that are involved in private funds. You know, they're typically going to be still registered with the SEC. I mean, everybody always talks about Madoff. You know, he never registered anything that he did with the SEC.
He was in bed with the SEC. If you read the books on him, he was in bed with the SEC. There's a great book called Talking with Strangers. And it explains that whole thing. It tells how, you know, these weren't registered funds. people were all over him for a long time. When the fund was only like a couple $1 billion, people were all over him that this doesn't make sense. There's no way this is real. And I don't know if he paid him off. I don't know. Hey, good old boy club. Not too much different than what you're seeing today. Like good old boy club. Nobody gets in trouble. You can pretty much steal and do whatever you want and nobody gets in trouble for it anymore. I mean, so they just turned a blind eye on him and he just operated up to, how much did he end up raising? Was it tens of billions or hundreds of billions?
It was up there. I don't know the exact number.
I think it was hundreds, if I'm not mistaken, but that was not even that wasn't registered with the SEC. So private funds, anybody that's going to invest in them should always do their due diligence. If they want to avoid, mistakes like Madoff's, then they should just go on and use a thing called, it's relatively new and not many people know about it, but it's a great place to fact check. It's called Google. You guys maybe have heard of it. You just Google it. Like if there's a fund you're looking to invest in, maybe just Google the name of the fund. And if it doesn't show up, or if there's nothing, that says it's registered with the SEC, you should probably be a bit nervous. But what else, let me kind of give you an example of a private fund, because I still want to go into this because this is a great place. People are scared of the market right now. A lot of private funds are absolutely zero correlation to the markets, to the stock market.
And the other thing with them is, they're not widely advertised. So, it's something that you're not going to know about unless you're in a community like this. A lot of these private funds are actually legally not allowed to advertise. They're not allowed to go out there.
Friends and family only.
Yeah, friends and family. So being part of a membership like this or a group like this, or, knowing somebody that brings you
money school family, maybe like that might kind of get you some information about some of those private funds.
Right. Absolutely. And so that's, typically they're smaller, they're not going to be like $1 billion or $100 million. A lot of times they're, $1 million here, or 7 million in this fund, or 5 million in this fund. So they're not huge money raises. A lot of times they have an end to them. So once the 5 million is hit, for example, it's closed down. There's no more money. It doesn't continue. So these are little things that, on how these function, as opposed to like a syndication or something where it's constantly money being raised, or, there's different regulations, Reg A and Reg D, and we won't get into the weeds on them and the differences, but they're out there. They're great returns. And you, while it's passive and you're not actively controlling the investment and controlling the money, you're doing your due diligence and you're building your relationship with the person that is actively managing and controlling that money. So you're still involved. So you still know what's going on with the project.
You would typically know the partners, or at least know one of them, because if it's friends and family, then you'd have to know one of the partners in order to hear about these funds, I would think.
Right. Yeah, no, absolutely. And you're going to get updates like with Battleborn, anytime that's, they're going to put out regular updates on what's going on. I know with Jack, as he, uses the money and he creates these projects, he'll send out newsletters once a month. Hey, this is what we've done this month. This is the improvements we've made. This is, what we're doing with the bank to do the refinance and, after they vet the money in. So it's, so you get those updates, what's going on. So while you're not completely active, you're still involved, right? So those are little things about, private investments, and they're excellent.
And let me give you an example, folks, just to kind of help you understand, because you all know regular funds, right? Mutual funds. You go out and you buy Fidelity Magellan, you buy your Vanguard Growth and Equity Fund. Like those are publicly traded mutual funds. Those are called open-end funds, meaning money just comes in and goes out, comes in and goes out. They don't close typically. Magellan did, but they typically don't close. Private funds have a raise limit. It's called 5 million, 7 million, 10 million. When they hit that limit, it's closed, no new investors. So let's go back to 2008. There was a small company that was created back then called Uber. And when Uber was being created, they needed to raise money because they needed technology and things. And I'd have to be a betting person. This is me speculating, but I bet you any money, a smart group of the partners in Uber said, let's create our own private fund and raise money with the fund. We're making money with Uber, but we got to build it. We got to put all this infrastructure in, and we need money to do this. And we don't want any more partners in the company. So we got to raise money, and we want to do it the right way because we don't want to be a Madoff. So without giving up equity in our company, we're just going to create a fund, a Reg D fund, hypothetically. We're going to go out and we're going to raise $10 million. And they go to all their friends and their family and they start telling them, imagine if, back in 2009, one of your friends knocks on your door and says, hey, listen, I want to talk to you about the company that I built and an opportunity for you. We started this company called Uber. We're going to take over, the industry. We're going to disrupt the taxi cab industry. We're going to do it better. And we're going to do this. And your neighbor tells you all about this and says, and look, we're we're raising money in a private fund and we're willing to pay you 20% interest and the minimum's 25,000. So if you put 25,000 into this fund for us to, run this company and get this company up to speed, we're going to pay you 20%. You'd look at that and you'd say, it's risky, or some people would be like, oh, this is a great idea. Yeah, I'll put 25 grand in, and they do that and they make their 20%. And then, the rest. Uber became what it is. A lot of companies start that way, folks. They got to raise money somehow. And there's only two ways to raise it. Either give up equity in their company. Okay. And remember, these companies aren't big enough to be public. So they can either give up equity and give up shares of their company, which most don't want to, or they can just raise capital through private funds. That's what this is. They're not correlated to the markets. I just want to give you that example. And there was a bunch of questions. Did somebody just answer that second Mark question, or what happened to that one? It was a good one.
I did. Yeah.
Okay, great. So I just want to make sure Mark got that question answered because it was a great question. Yeah. So with the private banking policies, I mean, the ones that I had up on the screen, a lot of people think that, this is only for the wealthy, because it truly is. I mean, the book Brent and I wrote, Mapping Out the Millionaire Mystery, talks about like all the wealthy people know about that. They all use it. And, a lot of people are like, well, if the wealthy are using it, it must not be for me. I must not have enough money. It's not true. So you could start a banking policy like those ones we just talked about with pretty much any denomination, anything more than 10 times your age monthly. And a lot of people think they need a lot. They don't. They can do it monthly. They can make deposits. They can make deposits semi-annually or annually. I mean, there's really no, there's nothing standing in people's way of that. And, I got some hard news, and I said it earlier, but folks, the cavalry isn't coming this time. I've heard it from many people. That one guy that, I was talking about earlier that was my friend and now isn't, that person literally thinks that, this new administration is going to pay off all of his old student loan debts. He truly believes that. And, maybe he's right. Maybe he is. Maybe I'm the one crazy for thinking that they're going to pay off everybody's student loan debts. But I really don't think that's happening. I don't think the cavalry's coming to bail you out. I really don't think that, somebody's going to come and just save you. I mean, I really don't think that's going to happen. The only one that's going to save you is you. That's it. You're your best bet. You always have been and you always will be. So stop treating life like your problems and your situation is somebody else's problem. Because folks, I'll tell you, whether it's the government or somebody else, the cavalry isn't going to save you. They're not going to come and save you. They're just not going to. You got to take that in your control and save yourself. And it starts with your mindset. The biggest thing with money is we've been brought up to believe money's evil. It's bad. I don't know, Stephen, were you ever told that when you were younger? Like my mom was like, don't ask them how much they make. Don't talk about money. Don't do this. Don't do that. We're brought up to believe that money is like this swear word. Like if we talk about money, holy shit, like somebody's gonna yell at me. Sorry, I didn't mean to swear, but you get the drift, right? We're brought up to believe that it's this terrible thing. It's really not. Can it be terrible? Yeah, it can be used any which way, just like a shovel. Go in your garage, grab a shovel. You can hurt somebody with a shovel. Heck, you could probably kill someone with the shovel, but you know what else you can do with a shovel? You can plant a tree. You can build a garden. You can build a house. You can build a building. You can build a charity. You can build a homeless shelter. You can build a food bank. All starts with the shovel, folks. It's just the tool. All it is. It's that tool, and whatever's in your mindset, whatever's in your mind is what that shovel can help you do. Money's exactly that. It's the shovel. It's the drill bit. It's the saw. It's just the tool. It's what you use it for that's important. And you all need to use it to basically get the life you want. And your life that you want should also involve bringing some people along with you. But as Brent would say, I've never met a poor person putting wings on a church. Like, I hate to say it that way, but like the truth be told, like, the people that are able to build the churches and donate the money, it all starts with this tool. They need money. They need to have this. No matter what you think about this is what we use as a tool, as a currency to make good things happen. If we want to set up a nonprofit and create a kitty shelter, for all those homeless kittens. Sorry, I'm a cat guy. It takes this. Like the homeless shelter is not going to build itself. The people aren't going to just show up and start building it. They're not, somebody else isn't going to go buy the lumber for it and put the roof on for free and pay for all the material. Like maybe that happens in your dreams, but like, I'm sorry, like I haven't seen that happen without this. This is the tool to do all the things you want and the things that you want to do for others. treat it like the tool, but you got to have the tool first. If you want to go plant a tree and you don't have a shovel, like, anyone ever tried digging a hole with your fingers? Like, number one, it's hard. Number two, like, you're not going to get very deep. And number three, you probably can't do it. I mean, you need the tool. And I know this is stupid and silly, but folks, like, fundamentally, I have to help all of you change your mindset before I can ever help you change anything in your life. And if you think the cavalry's coming, if you think that, that you are not the person that's going to take care of your financial future, then I can't help you. Steven can't help you. Brent can't help you. Jack can't help you. Chris Rude can't help you. No one can help you. And I'm not going to. If you can't change your own mindset, get off this live, because this isn't for you. And I am done wasting my time trying to change people's mindsets. I don't want to change people's mindsets. I want to help those people that want help, not people that don't want help. It's a waste of effort. It's a waste of energy, and it's a waste of everybody's resources. And nobody's got time for that. Who said that? Ain't nobody got time for that. That's right. Nobody does. We can't help everybody. That's the hardest thing for me in my position to really, and Steven knows this, and Gabby knows this, and Hannah knows this. It's my hardest. That's my what would be my demon that I face every day, is that I know I can help everybody, but I can't help everybody. I can help 5%. I can help the 5%ers that want help. And all of you on here, every single one of you, all 96, this is incredible. We haven't lost it. Well, now it just went to 95. We haven't lost a single person. So obviously you guys aren't thinking that I'm just talking to talk. I'm not. I'm talking because I care. I care about all of you. You are the 5%. You are the ones that I want to help. And you wouldn't be here if you didn't want help. So this is where it gets going. This is where it starts. And this is where the help begins. And, although the cavalry isn't coming, we are going to show you how to put the control back under your money so that you can do that. We're going to create a butterfly effect. You guys remember that movie, The Butterfly Effect? You understand what that is, right? A butterfly flaps its wings in Africa and changes things in North America. That one flap of that butterfly's wings changes something, changes a wind pattern. I know it seems silly, but it's not just one butterfly. It's millions of butterflies, tens of millions of butterflies. You can't change things. We can change things. And when you stop thinking it's you and me and me and me, and it's all about me, and you start thinking it's about we, that's when things really change. That's when the butterfly effect kicks in, and that one change you make in your life changes the lives of a lot of other people. And all you had to do is make one change in your life, and you do create that butterfly effect in your world. But because you're a person that believes in giving, you change other people's lives along with you. But we got to start somewhere, and we got to get back control. So Steven, what are some other things we can, it's so funny. Like every time I talk about the privatized banking, every single question that has come in is about the privatized banking, not the private funds, not the, the options trading platform, not real estate. It's always that, which is great, because you know what? That is the foundation. It starts with that. And then from there, we change one thing where the money goes first. Then from there, we change everything. We take back all the money that you're giving away to everybody else, just like this. We change this, and you become your bank. This is you on the bank. And then what we do is we pay off this, and we take the $500 or whatever dollars a month you're paying there, and we put that back in your bank. Then we take this money, the $500 a month that you just took back, plus the money that you made in compound interest. Then what we do is we then take that money from there and we pay off the car. And the car is $600 a month. And then we take that $600 a month we gave to somebody else's bank, and we put that in our bank. Now we just created out of thin air. Not really. It's not fractional reserve banking, but I want you to think of it as the same thing. You're not creating fiat money, but you are creating new money in your life by doing nothing other than taking back the money that you're giving away to somebody else. Okay? College tuition loans. Let's say your loans are $300 a month. You're giving them to somebody else today. But if we use this bank, your bank, and we then pay that off, now we can pay your bank that $300. Now what are we up to? 6, 5, that's 11, 12, 13, 14. We're at $1,400 a month of extra money every single month in your bank. It's all going here. It starts here and it ends here. It's a circle, folks. It's a circle of life, but it's a circle of money. Your money starts here with that one change. It comes over here, you move it. Got to move it, just like I showed you. Move that money. And it goes over here. And what is over here? Credit cards. Over here is car payments. Over here is student loan, whatever. Over here is all those things. But once we pay these off, we take the money we were giving to them and we put it back over here. Same dollars. Money you're used to giving away. And we just keep going through that. We pay the boat off. How much is your boat payment, Stephen, or is it paid off?
No, I don't have a boat payment. Good
for you. Best kind of boat to have is one that's paid off. You know what I think the best way to have a boat is? Have a friend that has a boat. You know what they always need? Gas money. Yeah. I'll never own a boat. And then same thing, credit cards, vacations and lines of credit. As you start taking back the money that you're giving away to everybody else, you start increasing your wealth. And you didn't have to work any harder for that. You didn't have to work any longer for that. You didn't have to give up any control. You actually took back control of your money. And all you did there, only thing you did is changed one thing. That's where your money went first. Like, this is what people always want to talk about. But listen, this isn't the silver bullet. This isn't the magic thing that's going to solve all your problems. This is where it starts. This is what will solve your problems. You start by taking back the money you're giving away to everybody else. Then from there, you start finding ways to make your money work harder. Private funds, real estate like Chris Rude's mobile home parks. How about land flipping like Jack teaches you at the 3-day? Okay. How about seed capital? We create corporate capital by creating a corporate credit score. I mean, it just goes on and on. We protect all of our asses or assets with LLCs and trusts. We teach you how to do all that. See, there's a series of things that has to happen, but you got to start somewhere because it gets really confusing if you just try to take it all in all at once. So we start one place, we build the foundation. From the foundation, we build on that by taking back all the money that you're foolishly giving away right now. You can laugh at yourself you're giving money away just like I used to, just like Stephen used to, just like we all used to. Yep. I literally today, and I'm very excited about this, just today, I paid off my very last commercial line of credit. I owed $13,000 to KeyBank. It was money that I had used for real estate deals. I took a loan from my banking policy and I paid that son of a bitch off today. And you know how liberating that felt? You guys don't know my story. Some of you are here for the first time, but I was so deep in debt. In 2014, I was buried in debt. I thought I'd never, ever get out. And today, I know it seems like a long time, but that's the marathon, right? In the grand scheme of things, from 2014 to 2021, I paid off every bit of debt that I have outside of my commercial mortgages. Let me be clear. I still have commercial mortgages because I don't want to pay them off. That's good debt. I don't pay off good debt unless I have nowhere else for my money to go. And my commercial mortgages, all my properties make money above and beyond what I'm paying. Now, if I was super smart, would I start paying those off? Yeah, but you know what? Why am I going to pay a mortgage off, a commercial mortgage on one of my rentals that I'm paying 4 or 5% on that mortgage? Why am I going to pay that off when I can take my money and I can put it in a private fund and make 20? I can take my money and I can lend it out to Chris Rude at 12%. I can take my money and I can do something else that makes me more than 4 or 5%. It's just the law of numbers. It's just math. All of this stuff with money really comes down to simple mathematics and understanding that logic sometimes actually is exactly what you need to follow. And logically, it makes sense to make 12 instead of paying 5. And logically, it makes sense if you understand compound interest to make 4 when you're paying 6. But that doesn't make sense when I say it, does it? Well, Chris, wait. What you just said? You said it makes sense for me to pay 6% when I'm making 4. Watch when Brent teaches you at the 3-day event, day number 2, you'll see exactly what I mean. If you understand Albert Einstein's 8th wonder of the world, then absolutely it does make sense, because when you understand compound interest, then you're able to earn compound interest. When you don't understand compound interest, you pay it. That's what he says. Those that understand it, earn it. Those that don't, pay it. Our whole lives, we've been brought up and conditioned and taught to pay it. This is that point. This is where you draw the line in the sand and you learn to earn it. So what questions do we have? We got any good ones we can answer?
Yeah, I kind of want to just maybe set it up. We're doing an Ask Me Anything in a couple hours at 4:30 Eastern. That's more of the spot. We only have 10 more minutes on here. I know we kind of want to be able to wrap up. Maybe you want to hit a couple of these real quick, but
I'm going to hit on Byron's. That's a good one. So he's saying, let's say somebody sets up a banking policy and they set it up to put, I don't know, let's just say 50 grand a year into their banking policy. And the number's whatever you want it to be. I'm just picking a number. And you put all 50 grand in at once, which is the smartest way because that money all went to work at once. But now you have some extra money and you want to put that money back into the plan. You can't. Okay. You got 50 grand in the plan. You maxed it out. You can't put another penny in it. But if you had taken a loan out to do something like buy a car, now you've got that outstanding loan. And I know when you bought the car, you took the car payment you would have given to the dealership and you paid it back to yourself. That's a monthly repayment. What I sometimes will do to keep my money moving, if I've got money sitting in a bank account, I'll take a chunk, like I just did 20 grand, and I'll pay down a loan that already has loan payments paying it down just to get the money moving again. Just because I don't want that money sitting in somebody else's bank when it can be in mine. And when I pay that 20,000 back against that loan that I took from my policy, I'm no longer paying 5% interest to the insurance company on that 20 grand. So that's just a way to do that. I mean, we can go deeper into that and they ask me anything. So there it is. Ask me anything today at 4:30, cocktail hour. I'm going to need it today. Then after that, there's the register for the 3-day. I'm telling you, I got an hour and a half with you today and we're going through this stuff. And, if you guys are even remotely getting interested in any of this stuff we're talking about, imagine what I could teach you and what all my friends could teach you in 3 full days. What would that look like for you? Well, I'll tell you what it would look like. It'd look like you drinking from a fire hose first off, but even if you just took everything you learned in 2 days or 3 days and you found one thing that really made sense for you, one thing that you could apply in your life that you could see yourself doing and you could be like, holy cow, and that got you so jazzed up, so fired up that you took action on it. That one thing out of everything you learned, you might learn a ton of stuff, but that one thing is the only thing that matters. So anytime you go to a training, especially like ours, where we do give a lot of stuff because we're hitting a lot of different topics, because a lot of people have different tastes and flavors and desires that they want. We can't just talk one thing. So the only thing that matters is that you get 1, maybe 2 golden nuggets. And the second thing that matters, which goes against the person that said knowledge is power, that is bullshit. Knowledge isn't power. It's the application of the knowledge you have and that you learn. Too many people in today's world, we live in a world where knowledge is at our fingertips with Google and everything else. But so many people just go around aimlessly with, I don't even know what they're doing, seeking up knowledge, looking for knowledge. They get all this information. They watch a million podcasts. And you know what? None of them, not many of them, I shouldn't say none of them, but a lot of them never take any action on anything that they gather. It's useless. You just wasted your time. It's like playing video games. You get all this knowledge of how to win the video game, but what is that going to get you? Is that time well spent? Well, that's the same thing. Take action on knowledge that actually changes things for you. So let's say that was a long answer to that one. Any other good ones on there? Let me give you one other thing. This is an important thing I want to get to. Get rid of this. Myself a blank screen.
I do get a lot, Chris. Should I use some HELOC money to dump in, then pull it back out to pay off the HELOC, but at least jumpstart it? I get that a lot.
I do too. And, so here's my answer. A lot of times I'll shy people away from using a HELOC or using borrowed money to start a banking policy. But here's the best way to figure out if it makes sense. First off, if you got a home equity line of credit and your interest rate on that home equity line of credit is 3%, very common right now. 3% is a very common number. So if you got a 3% line of credit, okay, but over here, and then in the middle, we've got the banking policy. We'll just call this the IBC, and we already know that it pays guaranteed for right now until 2022. And then over here, we got things like credit cards that you're paying 20% or more. Okay, we got car payments that maybe you're paying 5% on. We got a line of credit that you're paying 6% on. So we got all these things here, okay? So would it make sense to take money from this HELOC? And the reason the HELOC is a lower interest rate is it's secured. This is unsecured. This is secured, but with a car. It's not the same as securing it with a house, like your HELOC. And your line of credit is unsecured. So these are all higher interest rates. If we took the money from your home equity line, so we took one loan here, remember, you're gonna have to pay money back. So let's say that's $200 a month. And we put it here. So now we've got, I don't know, let's just use 10 grand. Okay, we got $10,000 we put here. And then from here, we immediately, within the first 30 days, we take that money and we move that money out. And let's just say your credit cards are, I don't know, let's say $5,000 you got credit cards of, and you're paying 20%. So we took the money from your HELOC, So it was kind of found money, made money from just using your equity and making your equity move. You put it here. You then took $5,000 out and we pay off your credit card, and you take that $100 or whatever it is and you put that back into your banking policy. And then from your banking policy, you then could pay your HELOC back. Or another way to do it is you could split the difference. Let's say you were giving your credit card $200. Sorry, I'm getting sloppy here. You could take 100, recapture it into your banking policy, take 100 and pay it down over here. I mean, there's so many different ways to do this, but basically it's just math. If this money's 3% and you're paying 20 over here, or paying 5 over here, or paying 6 over here, this is greater than this. If you just look at economics, using a lower interest rate loan to pay off a higher interest rate loan always works. So that's the part I want you to understand. Everybody's so caught up in this the whole life. All this is, literally, all this thing is, I want you to think of this thing as just a giant machine. It's a pump, okay? This is a big pump. And if I could draw like an engine here, like let's just say it's one of those big engines, got the big blower on the top. This is just your machine. All it's gonna do is take your money in and spit it out at a higher velocity. You're just putting money into this machine and spitting it back out, spitting it back out, spitting it back out. And if it costs you 3 here and you can make 20, you can make 5, or you can take back 20, take back 5, take back 6, then yes, that makes sense. Do the math. The math doesn't lie. People lie. I'll be the first one to tell you that. People lie all the time. Sometimes they lie because they want to. Sometimes they just don't know what they don't know, like Will Rogers says. But math does not lie. So just do the math. What else we got?
A bunch of questions rolling in. I don't know how deep you want to get.
Just keep rolling them. And then when we run out of time, we'll run out. And folks, again, a lot of the questions, we can hit some of these questions at the Ask Me Anything. We have a half hour there. Submit your questions on. Did you put the link up where they can submit their questions early and we hit them?
I don't know if I have that link.
Okay.
I'm sure I have it. Let me find it.
Yeah, we'll find the link and we'll give you the ability to ask some of the questions. If we don't get to them today, you can ask the questions before the Ask Me Anything and then show up at 4:30. And those will be the first questions we answer at the Ask Me Anything today at 4:30. But let's keep going through them. So Mark had a question with cars. Can we use this for a lease? No, I'm not even going to go any further. No, you would never want to use this for a lease. You just wouldn't. But what could you do with a lease? So would I use the banking policy to pay for the lease? Absolutely not. But what could I use? What could I do? Okay, so if your lease payment's $500 a month, okay, and your lease payment's $500 a month, and over here, let's just put the banking in the middle, okay? And then all we do is we basically deposit money in your banking, and then you want to pay for the lease. This is your car. I would never go from your banking policy to pay your lease. I would go from my banking policy into something like a private note on a real estate deal at 10%. So let's say I take money, I put it here. Now I got 10 grand here. Now I'm going to take this 10 grand, I'm going to loan it out to Chris Root at 10%. Okay, 10 grand for 10%. Sorry, I'm getting messy with my numbers here. Then I take the money I make here, this 10%, and I pay the lease. Okay, and then that would make sense because your money just got to work for itself to do that. But this is the most imperative part, is that, this is a machine, but this machine should be used to make more money, not used to just waste money. So if you want to do that, do it like we do with my mom's lease. Okay, we put money we use her HELOC. So in my mom's case, we use her home equity line of credit. We loan that money out to people actually I charge 12%. So we loan it out at 12%, and then I use that money to pay her for her car. It's a smarter way to do it, because remember, I always want you to think, folks, of your money has to be working harder for you. Putting money in an infinite banking and then taking it out of that to pay for groceries or utility bills or lease payments, it's just not effective. Does it work? Yes. Is there people out there teaching people to do that? Yes. Am I disagreeing that it works? No. But is it the best thing you can do with your money? If it is, that's boring, guys. That's boring. Your money's not working hard. Your money wouldn't even break a sweat doing that. And you're not going to basically get very far ahead. Maybe you get a car paid for, but really, if that's all your desires are, is just to have your lease payment paid for, then we need to expand our horizons. Your dreams aren't big enough because they're not scary enough. All right, what else we got?
Someone asked about, they thought that was commingling accounts.
Which one?
What you were just talking about.
It's non-qualified money. There's no
Right.
commingling. We're not taking money from what would be an example of commingling? We're not commingling your retirement funds with your non-retirement accounts and then doing it that way. We're not, that's not commingling funds.
We're not like a registered escrow account holder, commingling personal and, or broker or anything like that. Right. I was answering just some of these questions directly on here. So that's all good. Ask about the reseller program.
Oh, the 750. I don't know if he's got any room left. What I can do, anybody that's interested, you know what I'll do?
You filled him up?
I don't know. I might have, because I haven't heard from him, which probably means we're filled up. So the reseller program, folks, I've had Jerry on the show. He has a program where you can make 750, and I'm sure a bunch of you on here are already, getting your checks or really close to it. My friend Rick's starting to get in his checks. I know Shauna and Andrew here, I think, are getting their checks soon. If he has more room.
The video's in MSTV, right? All the contacts?
Okay. Yeah, I think so. We pretty much, we don't really save a lot of those, but what I can do is I can ask him. And if anybody's on the 3-day, I'll go over that in the bonus round on Friday. And I'll let you guys know if he's got any room. I will call him. Remind me to do that, to ask if he's got room, because that would be great. New year, why not add $750 a month to your bottom line without having to put any more than 6 hours of time in total, and you guys can get 750. So we can check on that. Let's see, in the process now, waiting on the LLC to be set up. So far, the process has been really simple. Great. There's a bunch of people, and if any of you are new to this, if you just listen to like what a lot of the people are saying, a lot of these people are, close to getting their checks. Lynn's getting her checks, still waiting on their checks to start for Don. Brent just started, so he's getting his LLC set up. Close to getting my first check. Well, a lot of you took advantage of that. That's awesome. When I heard about it, it was an opportunity. I'm like, holy crap, a lot of my people could use, and this is during COVID, we're still in COVID. What am I talking about? I was like, a lot of people could use $750. Excuse me one second. Hey, Carolyn, are you here? Oh, okay. I'm just doing a webinar. Can you just give me 1 minute? Okay, thanks. I'll be right up. So yeah, that $750 a month is really just a life-changing thing for a lot of people. Did you already get Nathan's question answered about what times the school is?
I didn't see that one, no.
So it's in the Q&A. So he's asking what are the dates? It's Friday, Saturday, Sunday.
This Friday, the 22nd. It starts at 10 a.m. Eastern time. It goes until 2 p.m. Eastern time, but plan on staying later than that. So 10 to 2 Eastern, all 3 days, Friday, Saturday, and Sunday. If you can't make one of the days, we do record them and we send you the recording later that day. So if you miss Friday, for instance, you can watch Friday night and then hop on live with us Saturday. It is best to be live because it is interactive. You ask questions. We do Q&A with all of the speakers that come on, all the experts. So it's best to do it that way. But if you do miss one, watch the recording, just hop right in the next day.
Yeah, a lot of questions coming up about that commingling. I guess I'm not understanding. Maybe there's some, I don't know. It's definitely not. I mean, you can commingle non-qualified funds. You just can't mix qualified and non-qualified, or you can't mix escrow funds that you're holding for someone else with somebody else's money. That's commingling. And a lot of people had a lot of questions. I mean, the math does not lie, and it really doesn't. So one thing that I know we're getting to the end, I got a video I want to play because you guys have all been waiting for this funny video. But the one thing I will absolutely say too, and this is the hard truth, is the truth hurts. The truth hurts when you actually learn about it, because people fight you about the truth. When you know something that nobody else knows and you start going around trying to tell everybody the truth about what you found, people beat you down. You create haters. People really come out of the woodwork to just stomp on you and kick you and punch you. And, then you always got to remember the Rocky Balboa thing. It's not how many times you get hit, it's how many times you get back up. Something like that, he said, but it was pretty powerful. It's like the truth does hurt. And it was hard for me. I get haters all the time. I get people saying the nastiest things you could ever even imagine. Things that sometimes I read it and I'm just like, what is wrong? I'm so used to it now. It's still hard. I'm not going to lie, but I'm so used to it now that I kind of just brush it off. And I usually try to hit negativity back with positivity. And usually it just goes away after 1 or 2 hits on that. But there's obviously something going on in the world that is creating massive amounts of negativity, and people are just not going to stop with that. It's that negativity isn't going to stop. So you got to rise above it. Fight negativity with positivity. Fight, false beliefs and things with math and with truth. That's it. But just understand the truth hurts. What we teach hurts. It's against the grain. It's against the norm. It takes money out of the bank's pockets, takes money out of the pockets of credit cards, takes money out of the pockets of Wall Street. And if you don't think they don't like that, then you're kidding yourself. They definitely don't like that. So they will fight this. And so will your advisors. And so will everybody else. And the truth lies in a 90-minute video or in a 3-day training. So you guys can, if you want to learn about the infinite banking, you guys can just go here. Let me just share something real quick. So we are definitely, going to have to push a lot of those questions over to the Ask Me Anything.
Yeah, we do a lot of training for free on infinite banking. Just so you guys know, you can go to Chris's YouTube page, youtube.com/the Chris Naugle. And there's tons of videos on there on using it for real estate investing, using it to buy your iPhones, using it to, for a child's college education savings plan. All that's on YouTube. What you're getting with the 3-day class as far as infinite banking is you have Brent Kessler himself coming on to train you and answer all of your questions directly on that Zoom with us. And Brent, just so you guys know, is the founder and CEO of Money Multiplier. This was his, this was his creation. When did he start Money Multiplier, Chris? Do you know?
2008, or I think it was 2008. Hannah might know. She would probably comment in.
13, 14, yeah, almost 15 years, I thought it was. So yeah,
wow.
So he's been doing this for a very, very long time. Chris indirectly has had whole life policies for a long time, but didn't really start practicing infinite banking, a few years ago. Okay. So it's 2014. Myself, I just started practicing it in 2020. So, but Brent is going to be on with us at the 3-day, directly answer your questions. So that's just kind of like an added bonus that we'll do, that we'll spend about an hour and a half on during the 3 days.
Yeah. So this is the YouTube channel here. So if you guys want videos, this is the if you like the banking stuff, but you're still just kind of not clear about it and you can't make the 3-day, just watch this video here, the Money Multiplier Method. I just did this video. Okay. A lot of you have seen it, but this one's brand new. Literally, we just posted this. I redid it. So that's there. All the other videos are all on here. There's so much stuff and we put new stuff up every day. Where
is it? Did you post a link?
What link?
Where were you saying all that's located? The new video?
You can't see my screen?
Oh, I'm sorry. I'm looking at something different.
Oh yeah, right here. This
I see it now. I see it now.
Money Multiplier video. But there's a ton of videos on here. And then I wanted to play a funny video for everybody. And I noticed it's not on YouTube. So what I did is I emailed it to myself. So let me see if it's come through yet. Otherwise, I'll play it. There it is. All right. So in wrapping up, Stephen, did you post the link? So folks, I guess just before we close and do that, I want to make sure that you all understand that, this isn't going to stop. We're going to keep giving you free trainings like this, but a free training will never be as powerful as the 3-day. And it's not just because we don't give good stuff away for free or we're holding our best stuff back. Not at all. The biggest reason, I have a video, I should play that video for you. The biggest reason why the 3-day is going to change your life more than free trainings is because you will care more because you put your money into it. It's only $197, but when you put your money, your hard-earned money into something, it becomes more important to you. Don't believe me? Think about that, right? When someone gives you free advice, do you take it as serious as when you pay a coach to give you paid advice? You do not. Okay. When someone tries coaching you on your professional sport or the sports that you're in and they're doing it for free, do you take it as serious as when you pay for a coach to teach you? You do not. It's far more valuable when you pay for advice than when you don't pay for it. So with that being said, real quick, I'm going to play a video and this should get you guys to laugh. That's its only purpose. So let me get this up here real quick. Hit pause. Your money. Some of you may have seen this, but we haven't really gone too big with this one yet. So Stephen, can you see my screen right there?
Yes.
Do you see that?
Yes.
All right. So in closing, we'll play a funny video.
Is your money lazy? I mean, do you come home after a hard day's work? One of those days where you just want to come home, kick your shoes off, and just enjoy yourself? Again, really? Only thing you find is your money sitting on your couch, eating your tater chips. Dun, dun, dun. If you've had that happen, so have I. And let me take you back and tell you a story of how I fixed that. how I put my money to work. I tried timeout. I tried bribery.
Hey, you want some beer?
I even tried tough love.
Hey, wake up, get to work.
But nothing seemed to work. I remember thinking to myself, this is just how it's gonna be for the rest of my life. I guess I better just get used to it. But then, in a last-ditch effort, I figured it out. There it was, the money multiplier method. And that was it. I figured it out, I put my money to work, and that solved the problem.
Oh, they never get old, folks. They never get old. And we are literally creating new skits, new videos every single, well, pretty much like almost on a bi-monthly basis. And we'll keep playing them at all the wealth webinar series. So I hope you guys enjoyed that. And thank you all. I know we didn't get to your questions. Put your questions in that link and we will hit them at 4:30 on the Ask Me Anything happy hour. Can't wait to see you guys this afternoon. And I really can't wait to see all of you at the 3-day event where we're going to rock your world and we're going to basically put the control back under your money so that you know what to do with it. So folks, it's been a joy, a pleasure, and a privilege from both myself, Stephen, and the entire Money School and Money Multiplier family. We thank all of you for spending your time with us today. We'll see you at 4:30.